The stock market is not a casino, it is a battlefield. And in this battlefield, William J. O'Neill's How to Make Money in Stocks serves as a war manual. It teaches that victory does not belong to the reckless gambler, but to the disciplined strategist. Success in stocks is not about luck, it is about rules, patterns, and psychology. O'Neill's voice is urgent, dramatic, and uncompromising. He warns that most investors lose because they follow emotions, not systems. They chase rumors, cling to losers, and ignore the signals written clearly in the charts. His book is a call to arms, a demand that you stop guessing and start thinking like a professional. At the heart of O'Neill's philosophy is the Can Slim strategy, 7 letters that form a blueprint for finding winning stocks. C stands for current earnings, the explosive quarterly growth that signals momentum. A is annual earnings growth, proof that a company is not a one-hit wonder, but a consistent performer. N represents new products, services, or management, the innovations that ignite demand. S is supply and demand, reminding us that fewer shares and higher demand push prices upward. L is leader or laggard, urging investors to choose the strongest company in an industry, not the weak follower. I is institutional sponsorship, the backing of big investors and funds that drive volume. And M is market direction, the reminder that even the best stock will fail if the overall market is sinking. Each letter is a weapon, and together they form a system that has guided countless investors to extraordinary gains. O'Neill dramatizes the importance of charts, comparing them to X-rays for doctors, essential tools that reveal the hidden health of a stock. Price and volume patterns are not random, they are the footprints of money moving in and out. He highlights the famous cup with handle pattern, a rounded base followed by a small dip, signaling strength before a breakout. He explains the double bottom, the flat base, and other formations that repeat across decades. These are not coincidences, they are human behavior, etched into the market's memory. To ignore charts, O'Neill says, is like flying a plane without instruments. You may survive for a while, but eventually you will crash. Perhaps the most dramatic rule in the book is O'Neill's command to cut losses quickly. His golden law is simple: never let a small loss turn into a disaster. Sell when a stock falls 7 to 8% below your purchase price. Protect your capital like a soldier protects his shield. He tells stories of investors who refused to sell, who clung to hope as their stocks collapsed, and who lost everything. The lesson is brutal but clear. Survival is victory. Discipline is the difference between fortune and ruin. In the market, ego is your enemy. Pride whispers, it will come back. But the disciplined investor listens to the chart, not the ego. He sells, protects, and lives to fight another day. Another dramatic insight is the importance of buying strength, not weakness. Many investors are tempted by cheap stocks, believing they are bargains. O'Neill flips this thinking. The best stocks are often the ones hitting new highs, backed by strong earnings and institutional support. Leaders, not laggards, create wealth. The crowd may scoff, saying it's too expensive, but history proves that winners keep winning. The great stocks of history, Apple, Amazon, Tesla, all looked too expensive before they multiplied in value. O'Neill's advice is bold: don't fish in the bargain bin, hunt where the leaders are running. The book is filled with stories of triumph and failure. Investors who ignored the rules and paid the price. Investors who followed them and achieved freedom. He recalls the roaring bull markets where disciplined traders rode leaders to massive gains. He recalls the crushing bear markets where careless traders lost everything. Each story is a warning, a reminder that the market is a mirror of human behavior, cycles of hope, fear, greed, and panic. To master the market, you must master yourself. O'Neill emphasizes that the greatest battle is not against the market, but against your own psychology. Fear makes you sell too early. Greed makes you hold too long. Impatience makes you chase every rumor. The disciplined investor learns to silence these voices. He follows the system, trusts the charts, and respects the rules. He knows that wealth is not built overnight, but through patience, resilience, and courage. The market is a test of character, and only those who master their emotions can master their money. In the end, how to make money in stocks is not just about profits. It is about discipline, resilience, and vision. It teaches that wealth in the market is not built by chance, but by rules. The dramatic truth is this: the stock market rewards the prepared, punishes the careless, and offers freedom to those who learn its language. So when you step into the arena of stocks, remember O'Neill's words: follow the system, respect the charts, cut your losses, and ride your winners. Because in the market, fortune favors the disciplined.